All right, what's up, guys? So today I want to discuss a little bit about trend transitions and how to trade trends, how to adapt in the market, and we're going to dig into a couple different concepts along the way. So on this Bitcoin chart, as I kind of referenced in my latest video, you should within about 4 seconds be able to tell me that this overall trend is down. Right, we are quite clearly heading towards this bottom right corner, and however you want to portray that idea so that your brain can digest it and therefore take action off of it is up to you, right? I like to use market structure along with moving averages. I use the 200 MA, that's this green one, and the 200 EMA. And then I draw some gray boxes as support and resistance to kind of give me like levels to work with along the way. Um, but prior to being a trend trader, I was really only good at ranges. So I knew how to trade ranges. So that would be like this price action over here. And in 2019, that was my thing. That was my bread and butter. I quite literally told all my friends, range trading, right? And more specifically, range low deviations are going to be the things that end up making me multimillionaire, right? And generational wealth. That wasn't true. Eventually, I needed to find a way to adapt. I could only really participate in the market when we were going sideways. And keep in mind, again, this is like early, like very, very early 2019. So this is just before Bitcoin goes on that run to 13K, right? And does like a 300 or 400% move. So I'm not really able to fully participate in the market, right? Because I'm limited. I'm only really good at trading ranges. So I had to develop a new strategy to fit into this new environment. And if you remember prior to 2019, for a lot of that price action prior to that 13K run upwards, we were kind of just going sideways within this like 20% range or so. So I wasn't really able to adapt all that well, which meant I need to find a new strategy. So I implemented something as simple as market structure along with the 200 MA and the 200 EMA. Now, again, I don't really care how you're able to tell me that when I look or when you look at this whole piece of price action, right? Everything I just circled, we are heading to the bottom right corner. Whether you're using Ichimoku, Bollinger Bands, RSI, MACD, awesome oscillator. I don't really give two shits how you're able to tell me that we're heading to the bottom right corner. But when you zoom out, you should be able to tell me we are heading to the bottom right corner, right? So what I'm doing here is I'm acknowledging the daily trend, because when we look at this daily chart, what is the trend? When we circle out this price action, what is the trend? The trend is down. How are we portraying that trend? Via the 2-hour time frame and the 2-hour 200 moving averages. So that's how we're portraying this daily trend. When we zoom into this price action, what is the trend, right? And this goes back into my most recent video where within 4 seconds, whatever piece of price action you're looking at or whatever time frame you're looking at, you should be able to tell me, are we uptrending? Are we downtrending? Are we going sideways in a range? Or are we consolidating? Right? It should take you 4 seconds to dictate what is the trend here. It's quite clearly this one, right? We're going sideways in a range. However, does this trend affect what we just said on the daily? No, right? We're quite clearly still downtrending on the daily. We're quite clearly still below the 2-hour 200 moving averages that we're using to portray that daily downtrend. So the midterm, right, the shorter time frames are all facing this sideways trend. But on the higher time frames, we're quite clearly still downtrending. So you can apply that to the daily, and you can really just scale that analysis further inwards or further outwards, right? So zooming in or zooming out. We're going to zoom out. So we just looked at the daily. When we go to the weekly chart, what is the trend for the weekly? Within 4 seconds, everyone should be able to tell me we are heading to this bottom right corner. This is a downtrend on our weekly. Now, if you want to argue, oh, but Merc, we're still uptrending on the weekly because look at those 200 weekly moving averages. No, no, we're not. You would have to scale up, right? So even on the monthly, I would still kind of argue we're heading to this bottom right corner on the monthly. You would have to make this argument that we're still an uptrending asset class on like a yearly chart. And then it just gets fucking, it's stupid at that point, right? It's totally like not even worth acknowledging. We all know that Bitcoin is a historically uptrending asset. You don't need a technical analysis chart to tell you that, right? So we can scale this mindset in or out as far as we want. When we go back to this lower time frame, the analysis that is affecting us the most, as in what is the current trend today or yesterday or a week ago, right? And what is likely to continue being the most relevant trend, it's this one. It's the fact that we are currently going sideways. So fuck your downtrend on the daily. Fuck your idea that we might be uptrending on the monthly still. This is what is currently affecting you, the sideways price action. So if you have failed to adapt to this price action, you have not done well for yourself. Quite often, I see this fallacy of a belief that you would be better off just being a robot, having no emotion, and just kind of doing things very arbitrarily and statically. It's silly to think that you can apply a static approach to a dynamic market and just profit consistently time over time over time over time, right? There are so many variables, especially when you want to bring in something like black swans, which have tended to happen once every year for the past like 5 years, right? Negative 50% drawdowns in like a day or two. That's a black swan. That happens way too frequently, more frequently than we've ever really seen as a human species, right? Going back all the way in history. So it doesn't really make sense to apply a static approach to something that is dynamic like the market. So what that means is if we're going to use something like the 15-minute 200 moving averages to determine this trend, right? This is the trend from May 5th all the way to like May 12th, May 13th. This is an exaggerated trend, and this trend creates a shit ton of opportunity. Why? Because we are very volatile. The trend is quite clear. And again, I don't really give two shits how you're able to digest this information that within this week span, we are heading to the bottom right corner, and we're probably going to continue heading to the bottom right corner, right? I don't really care how you're able to tell me that, but I'm telling you that based off of these 15-minute 200s, right? So this is where everyone says, oh, you would have been better off being a robot and just not having any emotion. And obviously, every single algorithm that gets, shilled to you via a massive paywall, pay me 2 grand for a lifetime access and just connect your BitMEX API and turn on 5x leverage, and you're going to be a multimillionaire within, a week, right? That sort of algorithm, that robotic way of thinking gets shilled to you as alpha here. And it absolutely is, right? And everyone with a eye, right, should be able to tell me that that is the case. We are downtrending. We are following a key trend. Again, however you're able to portray it, Ichimoku, Bollinger Bands, RSI, getting overbought on, the 30-minute, whatever. I don't really care. But you should be able to acknowledge we are heading to the bottom right corner. You should be able to expect the bottom right corner based off of justifying it via your technical analysis, whatever your system is. And therefore, if you can justify something, you should also know when it's no longer valid, right? So if I tell you we're heading to the bottom right corner, not because of the 15-minute 200 moving averages, but because there's a koala stuck in a tree somewhere and somehow that's bearish to you, you can continue expecting the bottom right corner as long as that koala doesn't get down from that tree. Once the koala gets down from the tree, you're wrong, right? You can no longer justify expecting the bottom right corner. So, this is where we transition. This is where all of a sudden we assume a trend in one direction. It works three, four, five times over the course of a week for negative 30% of price action. And finally, this is not where we're wrong. This is where we're adjusting. There's a big difference, right? It's not that I'm wrong here because the same mentality that has you quote unquote wrong has had you right for the past week over the past five, several tests of this trend and negative 30% of price action. This is where you adjust. When you adjust, you now say, oh shit, I can no longer justify bottom right corner. And here we are reclaiming the same trend that we just use as local tops for the past week over the course of negative 30% of downtrend. We should now look for further upside. And you only, right? You only get a 5% additional push upwards. That's it, right? That's pretty abysmal if we're going to be honest. You just downtrended 30% over the course of a week. You only got 5% additional bounce when the strength finally came in, right? Moving forward, you would assume that if we were ever going to hold on to that trend and continue, right, a bigger push upwards in the form of relief or a macro generational bottom, right, however much you want to exaggerate that bullish idea, that argument, uh, you would probably hold on to these 15-minute 200 moving averages as support. You just use them as resistance for a week-long trend, negative 30%, right? So you would assume that this is the buy the dip zone. This is the, do or die, whatever, and only for you to break back down. So now here you are trending, right? For this circle of price action, you're in the exact same trend that you were in for all of this price action. And when you look at your 1 minute during any of this price action, well, majority of it, you are downtrending. When you look at your 5 minute for the majority of this price action, you're downtrending. When you look at the 15 minute for all of this price action, you are downtrending. The hourly, downtrending. 4 hour, downtrending. Daily, downtrending. Weekly, downtrending, right? When you look at your 1 minute here, you're downtrending. When you look at your 5 minute, you're downtrending. 15 down, right? Hourly down, 4 hour down, daily down, weekly down. Every single time frame is telling you downtrend. We are heading to the bottom right corner, just the same way that it was for all this price action. And it should only take you 4 seconds to realize that, right? So, what does this occurring imply for this recent high? And this is where people tie in arbitrary words and definitions that I don't really care for, but this is how it goes, right? When we start to downtrend all over again across literally every single time frame, this is now a deviation, or it's a bull trap, or it's a fake out, right? Whatever you need to tie to that price action, right, via an arbitrary definition to justify it in your brain that this is now probably the extent of the relief bounce. And we're probably not going to get anything more than that. And we probably will continue downtrending, only for us to reclaim that trend all over again. So now let's put things in context. You have now had one key trend for the course of negative 30%, right? Over the time span of 1 week, you had one trend. Now, here we are from May 12th to May 14th. So 2 days, and really it's more like a day and a half, and you've now had three trends. What does that tell you? It now tells you that you should stop making a trend style analysis. This is where your edge has now diminished and your alpha has faded away, and your trend style analysis has now been rendered useless. This is why people shill you fucking moving average algorithms that are extremely easy to code. I don't even know anything about coding. If you give me 3 months, I could probably make one for you and sell it to you for $2,000 lifetime access, tell you to turn on 3x leverage on BitMEX API because it performs well in these conditions. But because the market is dynamic, when we have this sort of a condition, right, or a market environment, that algo, that robot that doesn't have any emotions and largely outperformed you during this price action, gets chopped to absolute hell during this price action. Whereas the human benefited from acknowledging the trend, applying a trend style analysis, and then rendering it useless via just kind of justifying it in a new way, shape, or form. The way that I did so was just kind of saying, hey, we've probably formed a new range. I need to stop making a trend style analysis. And we're probably going to see range highs, range lows, 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 right? All of a sudden, you have now fallen back into a winner's mindset. You were in a winner's mindset for all of this price action. You were a winner during the trend. Even when you were getting chopped up this 2 or 3 times, right? You're still in a winner's mindset. I don't care if you're getting rewarded or not, but you are in that winner's mindset. You assume the trend, you assume a new trend, and now here you are saying, okay, fool me once, shame on me. Fool me twice, still shame on me. Fool me 3 times, we're probably not fucking trending anymore, right? And now the analysis is simply we are going sideways. So I hate to break it to you, but if you have assumed, and this is a deviation, right? That's how my puny brain kind of justifies things. I label this as a deviation. We fall back inside the range, and that means what? That means range lows. And we go to range lows. What does that mean? Range highs. And we go to range highs. What does that mean? Right. So I'm able to justify it that way, but I hate to break it to you if you were assuming trends in any time in the past, what is it now? 12 days, 13 days, you are in a loser's mindset. This is 99% of crypto Twitter right now, and it's fucking abysmal. It's absolutely pathetic. People with hundreds of thousands of followers sitting here telling you this is the time we break down below range lows. They have now been wrong 4 or 5 times. This is the time that we break up and out of range highs. They have now been wrong 4 or 5 times, right? It's absolutely fucking pathetic. The trend is there is no trend. Eventually, this sideways will expand in either direction. And when it does, you don't want to fight it, right? That will dictate the new trend. You want to make an assumption thereafter. If we break up and outside of the range, we will also reclaim those 200 moving averages on the 2 hour chart. And that probably means we're going to get a bigger relief bounce because we just reclaimed a 2 month long trend, right? The same thing that we've been using as macro tops for the past 2 months, basically. And if we break down from the range, you want to assume that, hey, the trend on the daily and the weekly, right, and maybe even the monthly have just kind of taken priority. And here we are downtrending across literally every single time frame all over again. Eventually, we will break out of either side of the range, and the same people, the guard dogs that have barked at the wind this time, this time, this time, this time, this time, somehow managed to make themselves bullish at range highs and bearish at range lows, will tell you, give me my treat. I told you so. Give me my treat. I told you so. Meanwhile, you would have shifted into a winner's mindset and just simply acknowledged the range at face value for what it is, sideways, right? And benefited along the way. And potentially put yourself in a position to come in and trade it and actually make money off of it. It is the same exact analysis that we had since a week ago, a week and a half ago, pretty much. So this is the mindset. And again, I will be using this range to dictate what I'm going to do with my 200 weekly EMA buys. So until we break out side of that range in either direction, then I'm just sitting idly, mostly in cash, but I still have a little bit of a spot position for my trading account from like 10% lower than current price. So if we continue ranging, please don't be fucking surprised. I mean, it really should not be much of a shocker. If we finally expand away from the range, so be it. We have to do that eventually. I can't imagine that we're going to come back 5 years from now and Bitcoin is still trading somewhere between 28.6 and 30.7, right? So that's it from me, guys. If you like this video, please like, comment, subscribe. All that YouTube influencer bullshit. I have donation links in the description if you really want to donate. It's not necessary at all whatsoever. My Bybit ref link is also in the description. Come trade with me on Bybit. It's where most of my volume gets traded. So it's probably the best exchange in my humble opinion. So thank you guys so much. That's it for me today. Take it easy. See you later.